Hello, it's me, Yayo, and I'm going to do a simple trade review today. I haven't made a video in a while, and a lot has happened recently. A lot of change over the past 2-3 months. Over Q2, really, a lot of growth. But that all came from Q1. Now, I can get into Q1 and what I did during Q1 to get me to this point where I'm managing 50K in capital right now, and I'm receiving my third payout. Keep in mind, it's only been 2 months of me trading again, and I went from 10K, got 2 payouts from there, got to a 50K account, and had to wait about a week and a half to get my funding account details processed. But right now, I'm coming up on like a decent sized payout. And yeah, all of this success I'm garnering right now in Q2 was due to the foundation that I fixed and I refined all through Q1. 3 months of a monk mode and it's vigorous work the whole time. So that's for a whole other video. But for today, I'm going to be reviewing a trade setup I took today. And what I expect from indices going forward. Also addressing how to fix a regretful mindset, how to fix this this FOMO mindset, and overall just addressing some emotional issues that I've found impacting me the most. So, without further ado, let's dive into it. So here today I position myself short. Beautiful trade. Beautiful trade. And now let me explain to you why it was beautiful. So, indices have been pumping as of recently, and hold on 1 second. Okay. And see, it's not a coincidence. A lot of things in this market aren't coincidence. Most of them aren't. They're all predetermined moves. It's all predetermined. Everything's with stocks and everything's priced in. That's when, say, earnings hits or news hits, you can easily explain the move. Or if we get good news and it ends up going short, everything is predetermined. So here, on the weekly chart, what I saw was that we cleared a major liquidity point here on the weekly, and then what happens when we take out liquidity? We're going to move to the other side. So now that we have enough fuel, what liquidity point are we going to take out here? I'm going to take out this high. And then my ideology, TMT, is that we take insufficient liquidity, which is IRL. Insufficiency means that it's not important. And when it's not important, it means that it's not aligned with order flow. So here, this wick, this candle is not aligned with order flow. So we take it out because it's insufficient. It's not important. And then now we have enough fuel after creating order flow. Because, we take insignificant orders. We take all these orders. We take all these accumulative orders. And then we put it into something else. We turn these unimportant, these orders that are not of importance into something important. We do that through order flow. So, here you zoom in, there's about 3 weeks of order flow that was developed here. Wyckoff, whatever you want to say. Weak hands to strong hands. It's basically all it is. And now we identify where the next liquidity point is of insignificance. So it was this high, more refined to this line. I'll go into the daily right now. And yeah, so it's just all it is, all the market moves on for my ideology, on my theory, is just IRL to IRL, insignificance to insignificance. Now, every asset has its own liquidity tendencies, something I've noticed. But with the Dow, it's very manipulative and it's a very large cap asset. So in order to move prices, we need to take out liquidity. And with a market cap of $30 trillion, we have to take out a ton of significance all the time. So let's go to the daily and just show you a little bit more what I mean here. And this is just a quick overview of my trading style. So, you know, we take liquidity out, we develop order flow. Then we go target this. This wick right here is not important. That was the refined IRL, refined range IRL. So you could, this high here is important because it is aligned with order flow right there. So now you have to think is, we take all this liquidity here. Now where are we going to take, what are we going to take out in order to make another move? What is the most insignificant here? And if you don't understand anything that I'm saying right now, don't worry. I'll make videos discussing IRL and sufficiency, all of this stuff later on. And then, yeah, it's a simple cycle. It's a cycle of sweep to sweep. So I like to call it. So just make a quick little diagram, whatever, just price action like this. So, you know, here, say we sweep something there, sweep. Now we're going to take something out here, sweep. It's just liquidity to liquidity to liquidity. And if you could figure out where or what holds the most significance, holds the most importance, you basically have a cheat code. Because I feel that my ideology, my theory is so ingrained into my subconscious that I can mark it up at any time. So here I could show you that we take liquidity out right there, that we offload it into sufficiency, which is at those lows, and then we go up here, we take out liquidity there, which then fuels this move to take out this liquidity here, which then offloads into this wick, which has order flow on a lower time frame, which then creates order flow on this time frame, which then creates enough significance to clear out this insignificance, and then that leads to a move here, and then this clears out all the range IRL and offloads into order flow, and then we create order flow to then take out insufficiency. I can keep on going. I'm just viewing it as it is right now, but it's ingrained in my subconscious that I can understand where it is and how it works. So, you know, enough of that, enough of me rambling about my edge and why I think it's very powerful. Let me go into why I took shorts today and how I got a pretty decent win, about a 1-20 win. So yeah, let me just let's get into it. So here on the daily, you know, we've had a major impulse up. Shit. Oh no, hold on. I don't know what's going on. Okay, major impulse from the past 20 days. What can I say? Absolutely beautiful price action. I mean, looking at this, it looks disgusting, but it's so clean. With the understanding that I have and that you will soon have, it is truly beautiful. So let me show you why it's so beautiful to me. We clear out all this liquidity. These two wicks don't have any significance. You see, my cursor's right here. This doesn't make any sense. This doesn't make any sense to hold because it's not aligned with order flow. But if you zoom into here, that holds significance. That is important because it is aligned candle to candle, creating order flow. So now when you have this all taken out and offloading into order flow that is important, you're going to get the probability stacked in your favor to go long. You are in realignment with higher time frame, and that's very, very important to do. Because what are we doing as traders? What is our task at hand as traders? It's to execute our edge, execute our plan. And now, what is the purpose of our plan? What is the purpose of our edge? It is to put the probabilities in our favor. So if you can understand this and read it at a logical standpoint, we take our liquidity and we are offloading into an important bullish area after clearing insignificance on the other side. So what are we going to do? We're going to go long. So now the other part is identifying where to target and where it is most probable to go. Where is price going to target? Now here, we could see this is insignificant because it's not aligned with order flow. These highs are insignificant, and I'll get into that another time. But from what I understanding, these are insignificant. They're not important. You can see this wick is not important because it's not aligned with order flow. That's why we then get a nice retracement. Because we offloaded right after taking IRL. And that's exactly what happened here. We took a lot of IRL. We took a lot of candles, a lot of importance. And then we offloaded it into a nice area. Hence why we get reactions. This is exactly why we get reactions. You see everything here, every little choppy action here, all this rangy action. If you zoom into it, it happens because we clear out liquidity. Let me just show you an example. So let's go here to this area. If we just zoom into this, you could see, and it may look disgusting, it may look gross, this PA may look like, what the hell is this? But you can see, we clear our liquidity, we offload into this. See, we clear our liquidity, we get a nice move, we clear our internal liquidity, we get a nice move, we clear our liquidity here, and then we offload, we get a nice move. It's very choppy, but very efficient and very sufficient price action. Clear this out. You see, this was insufficient, and then we maybe get a nice mitigation here, offloadation here. You see order flow stacked here, take out this liquidity here, move here, clear out this IRL here. Boom, 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 ping pong, whatever the hell you want to say. All it is a liquidity cycle all the time. And it's very fractal. The market's very fractal because human emotion, human nature is universal. That is why the market is fractal. That's why the market moves similar on each asset pair. Because the way markets move are based off of human emotion. The way supply and demand moves is based off human emotion. The more we have of something, or the less we have of something, the more demand, the more someone wants it, the more expensive it's going to be. It's just simple human nature, and that's how a market works. That's what transactional market theory is. It's basically thinking of the stock market, an indice, Forex, crypto, as a whole spread market. You can see another example here. We clear out insufficiency there. We then get a nice reaction. Then we offload into order flow again. So then clear out higher time frame targets. It's the same cycle every single time. So now, now that you have some understanding of what I mean, you may be confused as hell right now. But let me just get into why I entered this trade today. On the 4 hour now. So, like I said, beautiful order flow here. I was trying to get positions long here, but I didn't have my funded account yet. Here I actually had a profitable day. I made about 6% on the 50K. So it was a very nice day. And then it was like life-changing money for me. And then my dad calls me. And then I missed longs that I was actually... all these shorts were kind of trends to my longs. I missed those longs and... missed out on about $20,000. But it's okay because these opportunities are everywhere. This opportunity was a week and a half. 20 grand in a week and a half. It's insane. But, these opportunities happen all the time because that's the nature of the market. We get moves like this all the time. If you involve yourself on one of them, it's a life-changing opportunity. So enough of my rambling, enough of these random nuggets that I'm spitting out. Why did I want to short after this high was taken out? Well, obviously, like I've stated before, in order to move price in the opposite direction, we need to take out some orders. And after we take out orders, then we could turn them into something important again. And then move in the direction that has liquidity that is insufficient. Think of insufficient liquidity. Think of unimportant liquidity as a magnet. Because it's not aligned with order flow. It's just free money for the banks, free money for institutions, free money. And here, so in this wick was order flow. And this wick right here caused a pretty decent reaction to the short side. About 1,500 points, which is a shit ton. That's, like I said, another life-changing opportunity. 50K, you get some decent moves on that account, you can make 40 bands. So, the only reason that this moved like that is because we cleared out all of the range liquidity. That is why we moved. But the thing is, this wick did not mitigate or offload into order flow. But simply, it created fuel for a later date. Because this high is not important. This high is important. This wick is important right here. Because it is aligned with order flow. Now, let me just show you something here. Now going farther and farther, or lower and lower on the time frame. This high, let me just mark up the top. Now let me explain what I mean. That area right there is where price ended up tapping. Right here is where it should have tapped. This is a beautiful untapped OFA, offloading area. Say if price tapped into that before, that red light tapped into it before, I wouldn't be targeting that high. But since that high is not important, it isn't aligned with order flow. When we come to tap this area, we're going short. Because here, sufficiency. Everything here is important. Except this. And this is the important part right here. This is the last unimportant area. So once that gets taken out, we are going short. Because now we are in alignment with weekly importance. So when I came to the chart and saw that was tapped into, I was eyeing shorts. I was fiending for shorts. I wanted shorts so bad. Because I knew, or I know, that these shorts can go to here, can go to levels down here, and could ultimately go short on the weekly. Because now we're in alignment with the weekly. But right now, I'll be positioning myself short until around this target. We have FOMC and PPI tomorrow. So hopefully we get some nice retracements, say from here to clear out something, to position myself short again. But I took my profit today. Had a great day. Paid for my trip to Paris. So it's always good having a profitable day, obviously. And like I said, this is my second month in trading since my monk mode, since my break, and it's been exponential. But here's something I wanted to touch on. Because this was my entry right here. I had viewed price around this area, and I did not want to enter short because I felt like I missed the move, so I just waited for retracements. And when I pulled up to the chart, my intuition told me that this extreme was going to hold. But I tried entering shorts early. I entered about 2 positions early and ended up losing. And that messed me up because I was just entering adequate setups. But the thing is, when I was I thought these setups were fine. I tricked my logic into thinking that these setups were fine. But when I was in them, I couldn't trust them. I could not trust them at all. And then when I waited, because then I put things in perspective, and I was like, let me just wait until either this area gets tapped, or I get to see price develop and then see if I get an opportunity there. And if I don't get an opportunity, I don't trade. But I know that the higher time frame is most likely shifting bearish. Because if you're going to understand where the higher time frame is going to go, all you have to do is involve yourself. And that's easy. So I basically accepted that it's okay to lose and didn't have any FOMO. And after doing that, I just let the market come to me. And that is very important, because not only do you let liquidity become a magnet, but you let your mind become a magnet, and you just let your mind be neutral to the opportunities the market gives you. So what I did was nothing. I waited. I let price clear out this liquidity because I knew that wasn't important. That was not important there. I let the market clear that out. And as soon as price got in here, I sniped it. I entered. Because I knew it was a high probability setup. But I managed my risk. And that brings me to another point. I enter a lot of executions early. And this isn't until the realization I had today of just being able to accept a loss and being able to accept a missed move. I can lose about 20 trades and get one win, and I will make back all my 20 losses off one win. But why would I undergo all that stress? Why would I put myself through all that stress if I could just simply wait for setups like this? Life-changing setups, but most importantly, setups that I can enter and walk away from the charts. I entered this trade, then I went upstairs and I read a book. Then I came back and I was up about 2 bands. That is powerful. But that comes with patience. And that patience and that trust, or it's correlated. That trust comes from patience, and that patience comes with trust. And when you have those two in alignment with each other, along with neutrality and a detachment, you will just be able to execute on every setup that presents itself. You will basically be in constant flow state. So, that was my trade from today. Beautiful trade. I entered on my 50K. Nice profits. I entered on a 10K phase one. With like little to no risk. I kind of just entered it to enter it. And if it hits my TP, I pass it off one trade. And with the 10K account, like I said, I just put it in there. That's how it should be with every account. With the 50K, with the 10K, with the 100K. Just be able to set and forget. That is the most important thing to do. Because that means that you have entered on the right setup. That means that you have successfully stacked the probabilities in your favor, not only technically, but psychologically. All right. So as I stated, and as you guys saw, I entered short on indices, and I was saying, or I was anticipating, a bearish move. And I made the video on Tuesday, and then Wednesday was FOMC, and price absolutely delivered beautifully. I'll show you guys the before and after right now, and it's amazing how the market just moves so systematically. But I passed phase one on that account, on that trade. I had it on my 50K as well, my 50K funded, but I ended up. That was my PlayStation. Hold on. As I was saying, I had it on my 50K funded as well, but I ended up closing it early because I'm not used to swinging, and I I was attached to money in a way as well. I was like, if the price went back break even, I wouldn't have as much money for Paris and all this stuff. So my TP level was enough money for Paris to treat myself. So I just took my profit, and on my phase 1 on my challenge account, I entered a very nice snipe, same entry, and I held it all the way through to TP, to the immediate delivery, me and you. And price went all the way to ultimate delivery, melted straight to ultimate delivery. Why? Because we had news. Now, something I want to note is, since I sniped it so well, I was able to confidently hold it on my phase 2 all the way to TP. I had entered with like a 0.03 risk, basically just, I was like, whatever. I'm just throw the trade there. I should have risked more, because I usually risk more. I usually risk 0.5% to 1%. But I just threw it there. I said and forgot, and that is the way you should trade, because I was also very confident in that trade, and because it was valid. It was valid to my plan. So I was able to hold it all the way through. I was able to sleep on it, and I woke up, and I was up 500 points. So beautiful stuff. Beautiful stuff. Yeah, just a quick update. Clean ass price action. I'll show you guys a picture of how prices develop now. Beautiful movement to the upside to clear out on higher time frame. I expect a push bullish for the next 2 weeks, really. And then throughout the months, throughout the weeks coming, then we'll get bearish movement. Big bearish movement. So there's something that I want to address that I'm going to be doing moving forward. You know, I created TMT about, let's say I created November of last year. And, you know, I spent Q4 was just stupid. I was gambling away. I was getting ahead of myself with TMT, and you know, I saw the opportunity, I saw the potential, but my mindset wasn't there. I was basically just gambling. So then that was Q4, and then Q1, I dedicated all those 3 months to my monk mode and mastering myself and developing and creating a probabilistic mindset. And that is something I feel like I've been developing, and I've been developing quite well, along with overcoming an addiction. So I feel like I have grown immensely as a human being, as a trader, as a friend, and as a person in general. But now in Q2, you know, I call this my growth phase. I've been applying what I've learned in Q1, applying what I created in Q4, and I've been executing on it. Now that's halfway through the last month of Q2. I'm gonna be in Paris for a week, so basically Q2 is done. My growth phase went successful. I secured 3 payouts consistently, and I secured enough funding for me that I could live a decent lifestyle. But now going into Q3, I want to finally develop my system. Because what I've been doing is just been trading off intuition and this understanding of the market. But I want to create, and I am going to create, a system that is objective and that I could give to a bot to automate for me. Because if I could do that, then I will mitigate all chance of psychological error. And that is something I struggle with still, and is what directly messes with my performance. I've had times where I had 2 wins in a row and made 12%. But I've had times where I get 10 losses in a row and then get 1 win and then 10 losses in a row. But that 1 win wipes out all the losses, but I just can't get multiple wins in a row because of my mindset. And this has been an issue that has been plaguing me for a long time. But it's because I really don't have any criteria. and I'm just trading off intuition. And if something psychologically messes with me, my intuition becomes severely faulted. So now the project that I am undergoing is, okay, so let me just give you some context. I would do chart annotations. A lot of chart annotations, basically reviewing every single one of my trades from the past 2 months. Let me just show you really quick. Just annotations on the chart, just visually. Well, I have visuals and then I'm summarizing what happened throughout the day, and it's just visual journals, really. And I had 2 months of this data, and now I've compiled it all and I've written it all down, and it is a lot. It's about 12,000 words. And now I'm feeding all these words, everything here, into ChatGPT to create me systems. And it's basically my trading coach right now. And it's going to create me an objective system to trade. And now I will finally have the missing piece to my plan, to my playbook. Now, of course, it's not everything that I need, but it's the foundation that I've been lacking and that we need as traders. A mindset foundation, a psychological foundation, a technical understanding and foundation, and to just be successful in life. Because in order to be successful in trading, you must be successful in life. But that does not mean that being successful in trading will lead to success in life. You must understand your priorities. And if you can align yourself and your purpose and your energy with your priorities, you will be happy and you will be successful. I want to thank everyone that made it to the end of the video. I tend to ramble a bit. This video is about 30 minutes long. I intended it to be for about 20 minutes. I went about 10 minutes over, but like I said, it's my first video back for a while, so I had a lot of things I wanted to address on the table. A lot of things that I feel you can benefit from and have value. And yeah, it's about the end of Q2. Q1 I was silent, it was a monk mode. Q2, silent as well. Working on the system that I'd be creating. Now going into Q3, I'm going to be creating another system. Probably the most important system, but the most simple. I'm going into Q3, Q4, like I just said, creating that system, and then approaching consistency as a trader. I've been consistent for 2.5 months now. I'm going to be expanding in other businesses in my life, other aspects of my life. I'm planning on getting a Tesla 2024 refresh. It's just going to be amazing. And yeah, big things coming. Big plans, big ideas. A lot of ambition. And I will be documenting it all. Stay tuned for that Paris vlog.